Okay, again, my name is Chris Sommer. I'm the Managing Director of Hope for Homeowners Consulting. We are based out of Wesley Chapel, Florida, and today's session is going to be covering basically the topic of cancellation of debt 1099-Cs. We have our guest host today here, Scott Hundley from Tampa Tax, CPA. He'll be answering most of your questions and covering the topics that hopefully will answer your questions. And one thing I want to do up front is mention kind of the ground rules with what we're going to do. I'm going to do a little brief introduction of myself here. I'm going to introduce Scott, and he's going to take about 15 minutes or so to go over his subject matter. I would ask anyone that's listening in that you would please, throughout the process, we're going to be handling questions and answers at the end. So approximately around a little after 7:30, we should probably be addressing your questions. But if you have questions that come up between now and then, it's going to be a text in, tap in. There's a Q&A portion on your on the computer, and you can, as we're going along, type away in your question, or you can wait to the very end. We'll give you an opportunity to ask your questions through in writing, basically. So with that being said, let's get into this. So anyways, what Hope for Homeowners Consulting, I'm not sure if anyone knows what our company is and what we do, but we are an attorney-backed consulting firm with expertise in how to best resolve distress / foreclosure property cases for our clients. We handle all aspects of the settlement process minus legal advice from beginning to resolution and thereafter. And basically the point is to help our clients get out of their problems and help them reestablish their lives. Another thing that's important is we help clients stay in their homes if possible. But if that's not possible, we help them get out of their homes without being financially devastated. All we ask from our clients through our process at H4H Consulting is a prompt response to our paperwork request, and basically just say yes or no to the settlement offers we bring them. Some things that some of our clients need to be aware of is the fact that anyone who's trying to navigate their settlement process in this marketplace needs to be aware of that. If they use our services, you don't have to worry about sending in docs to your lenders, negotiating with your lender, or trying to navigate the very complicated waters of your settlement process with your lenders. That's what we do for you. In a nutshell, we have a standard operating procedure that we use for all of our clients. And first thing we do is basically assess where you're at. We do that by looking over your financials, giving you back a report called a written action plan. And in that plan, we assess your cash flow, your net worth. We assess if there's any government initiatives that might apply to you. HAMP modification, any other HAFA programs, you name it. We look at everything that might apply to your specific situation. We'll put together a short-term plan that is, from our opinion, how to best handle not only your mortgage situation, but your overall financial picture. We look at credit cards, medical bills, everything's on the table in our feedback to you. And then we also, in this written action plan, we also continue with a long-term plan. We give you a step-by-step process. For example, we go from A to B to C to D. We explain what we're going to do and the order we're going to do it, how we're going to do it, and why we're going to do it, which is a very important part of the process. And we also attach milestones to each of those tasks that we say we were going to perform to you. We give this written action plan up front in writing, and we have you hold us accountable, and we hold everybody we work with accountable. And obviously including guys like Scott here too. With that being said, it's important to stress to you guys today that each plan is personalized to that client's specific needs and resources. And sometimes in cases with multiple properties, your strategies are going to differ with each property. So basically, in a nutshell, you don't paint a brush. Not one answer is going to cover all of your scenarios. Depending what your goals are, what your resources, what your capabilities are. We basically personalize each specific settlement strategy to each property that you may have. And if it's only one property, that's good for you guys because it's only one thing we have to worry about. Makes our process a little bit easier. And lastly, just to keep on track here, we take the stress and hassle and confusion out of the process and let our clients go back to leading a normal life. And that's, in essence, let the experts do the work, and that's what we do here at H4H Consulting. That is my information on what we do here. I want to get Scott on board here, and I'm going to do something that's going to, I'm going to just do this real briefly. I'm going to just do a little bit of a share the desktop with everybody real quick, and we are going to just show you. Hi, I am Chris, and we won't do this because there's a delay on the video process throughout what we do here, so I'm going to minimize the screen, but I just want to give it a face to what we're doing here today and give it a little bit more personal approach. With that being said, I'm going to go ahead and minimize this and go back to the screen and introduce Scott. One thing I will mention about Scott is probably one of the most premier CPA experts that I've personally dealt with in the area. He's been in the practice for about 4 years now. He was raised in Brandon, and if you live in, it doesn't matter where you're at, but if you live in Brandon, this is definitely one of the places you want to go to get your questions answered. So with that being said, I'm going to introduce Scott Hundley and let him go from there.
All right, I appreciate the introduction. I can give every person here a little bit of what what I do and what our firm does. We're a full-service CPA firm. We've been around for 12 years, like I said, from the Brandon area, and we do a lot of tax work. Mainly our work is in tax, but we also do some financial statements and things like that for businesses. So it's mainly business and personal tax is what we do. We have seen this. I think this video will be valuable for anybody that's watching it, because we've seen, obviously, due to the mortgage problems and housing problems, you're starting to see these foreclosure, short sales, debt forgiveness income, a much more popular thing. And not only is it widespread, but it covers all sorts of people, from people that originally thought they were going to have no problem paying this to all of a sudden they thought they'd never lose their job to now they lost their job, or they have a shortage of income. Or you have people that own a property and are renting it out, and you thought you could always cover the mortgage, and now that the cash flow is negative, you can't, and you may have to, have an alternate means to get rid of that property or adjust your situation. So there's no really one person that this applies to, because it covers all people from all classes. It doesn't matter, what your net worth is. We're seeing people that have high net worth, and they're saying, hey, I still can't afford this property, and this may not work out. So this is very valuable for almost anybody. Maybe you have family or friends that are in this situation. So I'll give you a little bit of idea on how debt forgiveness works and those sorts of things. The first thing is I'll try to cover the most common information that would apply to most people out there. The first thing is, we'll say it's on a primary residence. You own your home, and you may have heard of the Mortgage Forgiveness Debt Relief Act that came out. If you bought your home, and when you purchased your home, you used all the mortgage to buy your home. So you took out the mortgage and you purchased your home. You didn't later on take out money to pay for a car or boat. You just, what you owe on your home is what you originally had on there when you originally purchased the home. If that's the case and you short sell, or the bank does a modification or something like that, if you're short selling or foreclosing and walking away, a pretty good chance that debt will not be taxable to you. That's always a positive thing, like I said. Now, things that can change that is if you took debt out that you didn't use to buy the home, and you use that for alternate means, whether it be just to live your normal life, to pay for school, to buy groceries, anything that was not used to improve the residence that you purchased. That debt can sometimes be taxable, not to all people. The things that you would want to look at, you obviously want to discuss it with a CPA, but the things that the IRS looks for in that case is, you might be able to get rid of that debt through insolvency. And I will say the IRS looks at insolvency different than the bankruptcy court. Bankruptcy court can look at IRAs and things like that and exclude those from your assets, but for the IRS purposes, they do include IRAs, as far as your net worth. So that can make some people solvent, so to speak. But I can say most of the time, if you're in the situation where you owe a lot more than your home is worth, all that negative, all the debt that you owe on that's not, related to the value of the property currently, that negative equity, so to speak, or negative net worth, you owe $200,000 on a home that's worth now $100,000. That negative $100,000 a lot of times will cause you to be what the IRS calls insolvent. You don't have net worth. That will a lot of times allow people to get get rid of the debt forgiveness should you receive a 1099, a 1099A, which usually come in the form after a short sale or abandonment of property.